So in the midst of all this coronavirus outcry, you probably didn't know that there is an oil war going on right now.
The markets were sent downward today by a global oil price war and concerns over the coronavirus, another massive stock drop that's stoking fears of a recession.
Two of the world's leading oil powerhouses, Russia and Saudi Arabia, partly because of the coronavirus, are currently in an oil war. Everyone's carefully watching to see what will happen, and we don't know who's going to win just yet. So in this video, I'm going to be explaining the oil war, how it all happened, how it all started, and everything in between. So basically, a long-standing deal between Russia and Saudi Arabia fell through over this past weekend, and it sent global markets spiraling. Now, the reason the coronavirus actually affected this is because of the fact that Asia is seeing a massive drop in oil consumption because of the coronavirus outbreak. So last week, OPEC, or the Organization of Petroleum Exporting Countries, met to discuss what to do. OPEC is essentially a cartel of 15 countries of oil exporting nations, and they all met at OPEC's headquarters in Vienna. In the meeting, they discussed the next plans of action as the disease has lowered global demand for oil. Now, Russia is actually not part of the bloc, but Russian officials were invited to the meeting. This is because 3 years ago, Russia made a deal to coordinate its production levels with the group, a pact known as OPEC+. So at last week's meeting, Saudi Arabia, the cartel leader, suggested collectively that all participants should cut their production by 1 million barrels per day. They also suggested that Russia should make the most dramatic cut of about 500,000 barrels per day. Doing so would keep oil prices higher, which would bring in a lot more revenue for nations in the bloc. These nations are heavily dependent on crude exports, and it's a big chunk of their economy. Now, Riyadh, or the capital of Saudi Arabia, considered this move 100% necessary. This is because Asia, which is rolling in thousands of cases of coronavirus, mainly in China and South Korea, is not consuming as much oil and energy as they were a few months ago. For example, China's refineries last month cut their imports of foreign oil by about 20%. Lower demand leads to a drop in the commodity's price, which in turn hurts countries' bottom lines. Now, the Russians were very wary against the move for many weeks and opted against the plan, although it's still unclear about why that's the case. Some say Russia wants to keep prices low to hurt the American shale oil industry. Others say Russia is gearing up to take a bigger sliver of Asian and global oil demand for itself. One expert said that Russia is worried about market share and think that they do a lot better competing with the Saudis as opposed to cooperating at this point. Now, Saudi Arabia didn't take too kindly to the Kremlin's decision, to say the least. They started with slashing its export prices over the weekend to start a price war with Russia. This brought the price per barrel down by $11 or to $35 a barrel, which was the single biggest one-day drop since 1991. It was the second worst day on record for oil, and it dropped more than 30%. These are levels not to be seen since February of 2016. Now, the result of that decision is that the Saudis have positioned themselves to be able to snatch up what's left of the Asian oil demand by having a cheaper product to sell. This was definitely aided by very low production costs per barrel, but there is a major downside as well. The problem is that the price for oil is a global one. So if the Saudis tank it, which they pretty much just have, this goes the same for everywhere. Dwindling revenues mean global energy companies make a lot less profit. Now, don't forget, this also includes smaller shale producing firms in Texas and the Dakotas. This greatly spooked markets all around the world, with prices in Tokyo and shares dropping more than 5%. The top index on Wall Street also fell more than 7%, forcing a trading stop early at the Monday open. Now, Trump was very unhappy with the news. As we know, his strong case for re-election is a growing economy and a strong stock market, and I mentioned this in my last video when I did sort of an update on the coronavirus and the Fed's decision to cut interest rates. If you haven't seen that video yet, I'll put a link in the description, but of course don't go there until you have finished watching this video. But oddly enough, he simultaneously also seemed happy that the prices at the gas pump are at very, very record lows, which also could in turn strengthen his re-election in November. At the beginning of the week, he tweeted, "Good for the consumer, gasoline prices coming down." Few could even begin to predict what's going to happen next as the coronavirus continues to impact the global economy. What is clear, though, is that lower demand for oil and long-term trends in the energy market have been totally ruptured and have destroyed what's even left of the Russia-Saudi slight alliance. And it's no secret that the consequences will be felt everywhere, including the United States. One expert on international oil cooperation said at this point, it's basically every country for themselves. But the odds and chances are looking good for Russia, and the Kremlin is confident it could win this oil price war. For Russia, on Monday, the country woke to see the lowest prices in 4 years, and this was the biggest fall for the country in this century. Russian companies were hit the hardest, and Russian state banks like VTB and Sberbank plunged more than 20% on Monday on the European markets. And of course, energy and oil companies also were shocked and plunged greatly on Monday, but the Kremlin is still very confident that their decision to leave OPEC was very wise. They largely blame their OPEC partner for refusing to reach a compromise. In fact, according to an official statement, the Russian side offered to preserve the production cuts already in place until the second half of 2020, quote, in order to better understand the impact of the coronavirus on the global economy and oil demand. However, the statement continues, our OPEC partners decided to increase oil production and start a fight for market share. The deal didn't make sense from the point of view of Russia's interests because the US and OPEC plus countries are ready to increase production. The Russian state oil giant Rosneft controls more than 40% of Russia's oil. They've been a long vocal proponent of the OPEC plus production cut. A close associate of Russian President Vladimir Putin has been a long proponent and has been advocating and lobbying for a withdrawal from the OPEC plus deal in an effort to hurt U.S. shale companies. Russia is ready. They've done the calculations to suggest that the Kremlin is ready for the fight. But many agree that Putin's conservative economic policies in the last few years have prepared Russia for an oil downturn. The oil price needed to keep the state budget balanced is $40 per barrel, which is half of that of the Saudis' $80 per barrel. So according to this analysis, Moscow would be a lot more resilient than Riyadh at keeping low oil prices. This would mean the Saudis would have to return to the bargaining table. Russia's energy minister announced that the current situation in the oil market reflects the ministry's forecasts. He said, quote, the Russian oil industry has the quality resource base and enough financial safety margin to stay competitive at any predicted price level. And the International Energy Agency, or the IEA, expects that oil demand will rebound to a normal level in the second half of 2020, well within Russia's comfort zone. And meanwhile, the Russian central bank announced it would halt foreign currency purchases on the lower level to reduce the downward pressure on the ruble. But other experts and analysts are still a lot less bullish. They argue that none of these measures are sufficient enough to compensate for a long-term downward recession of oil prices. A lot of experts agree that no matter what the Russians attempt to do, the overall performance of the economy and the Russian oil industry will all be dependent on what the COVID-19 pandemic will do to this global economy. And as reported by Bloomberg analysts, if the government fails to rein in this coronavirus outbreak, Russia could see a 4.8% shave off of their GDP within the course of a year, which would hurl their economy into a deep recession. Russia may remain confident, but there is still a lot of uncertainty and a lot of the unknown. So let's make our predictions now. Who do you think will win this oil price war? Tell me down in the comments below. Do you think it'll be Russia or the Saudis? But with that, I hope you enjoyed that video. If you did, be sure to give it a big thumbs up, smash that like button. And if you'd like to see more videos from my channel, I post videos every single week covering business, finance, entrepreneurship, mindset, strategy, and tips and tricks from my own experience. Be sure that you subscribe. I post videos every single week without fail. And if you'd like to be first in line to see that video before anyone else, be sure that you hit that little notification bell as well, so that you're notified every time I make a new one. See you in the next video.